Good morning. It's Monday, the 25th of November, and this is Govindraj Ethiraj, headquartered in broadcasting as well as streaming from Mumbai, India's financial capital. There is no take for today, except that there are lots of insights, including political and economic. And the headlines. Indian markets rise away on political and global cues on Friday, could extend on Monday. What does the Maharashtra victory for the BJP mean for the state's economy? Oil prices are inching up once again. Which way could gold prices go from here, and what's the outlook? And what's at stake for Tesla in China?
This is the Core Report with Govindraj Ethiraj.
Markets pick up steam over the weekend. The stock markets had a very good Friday as well as a day, and this was after a while thanks to expectations of a victory for the ruling BJP party, which turned out to be true and better than what was expected or anticipated. The fact results were better for the government at the center will of course provide considerable political capital, though it's not clear whether much changes on the ground, since it's the continuation of the same alliance in the state of Maharashtra, albeit with some changed groupings. Now, there is a bill for subsidies that has to be picked up, and we'll come to that shortly. On Friday, remember the election results were declared on Saturday. The BSE Sensex and NSE Nifty ended the week's trading session on a very high note, rising over 2% each. The Sensex rose 1,961 points to settle at 79,117. The NSE Nifty50 ended higher by 557 points, closing at 23,907. The Business Standard pointed out that the bulls were on the rampage on Dalal Street with 49 out of 50 constituent stocks of the Nifty50 ending in the green. The big gainers were State Bank of India, Titan, Tata Consultancy Services, Ultratech Cement, HCL Tech. Bajaj Auto was the only stock in the Nifty50 that was in the red. The Nifty Smallcap100 and the Nifty Midcap100 were also higher and closed higher, but not as much as the benchmark indices. Importantly, particularly in terms of cues that Indian and Asian markets could pick up on Monday morning, the Dow Jones Industrial Average closed at a record high on Friday, capping another winning week for stocks. The blue chip Dow Jones gained about 426 points to 44,296, a new all-time closing high and its third straight positive session, signifying that the post-election rally in the United States still seems to have some legs, according to CNBC, which also reported that the Dow ended the week about 2% higher, while the S&P 500 and Nasdaq each added about 1.7%. CNBC also said that Friday's moves marked a continuation of a trend where investors shift exposure from tech to names in more economically sensitive corners of the market, and that could explain why the industrial and consumer discretionary sectors led the S&P 500 higher, while the communication services sector was the worst performer. And while tech was not so strong, Bitcoin neared the long-awaited milestone of $100,000. Foreign investors back home have now pulled out about $3 billion in November from the Indian equity markets. While this sell-off continues, the quantum of net outflows, says the Business Standard, has significantly reduced compared to October, when foreign portfolio investors withdrew about $11.5 billion on a net basis. Oil prices inch up again. Oil prices rose over the weekend as geopolitical tensions from Russia to Iran were higher, while strength in equity markets increased appeal of risk assets, according to Bloomberg. Brent crude is now settled above $75 for the first time since November 7th. The Russia-Ukraine conflict shows no signs of cooling off, with both sides now armed with longer-range missiles capable, obviously, of inflicting considerable or more damage and harm. Oil prices in general have been swinging between expectations of oversupply and fear of rising geopolitical tensions, and I guess finding the right price point that factors both on a consistent basis is leading to more volatility. Oil has swung between weekly gains and losses since mid-October, Bloomberg said, adding that geopolitical tensions have caused temporary gains but failed to provide extended uplift in the face of widespread expectations of a crude surplus next year. That's something that we've been talking about and will keep returning to. The state of Maharashtra goes to BJP. The Bharatiya Janata Party is set to clock its best ever performance in Maharashtra since it was founded in 1980, and the Congress its worst since 1962, when the newly created state had its first assembly polls. So the BJP, along with its allies who represent the Mahayuti Party, are now set to decide who the next chief minister will be, because while the alliance is the same, the composition of that alliance has shifted and the BJP has clearly more seats in its control. The question, of course, is what does this mean politically for the center and economically for the state? Remember, this victory does come on the heels of unprecedented subsidies, including to several sections of society. And the question also is, could there be a positive outcome of those giveaways? I reached out to veteran economic writer and author Shankkar Aiyar, and I began by asking him the first broad question: what was the significance of this victory by the BJP in the state of Maharashtra?
Well, after a very long time, actually, there's been a massive mandate for an alliance. I mean, just the BJP on its own is more than twice that of the entire opposition. So it's a very good verdict for them. It sort of signals some amount of stability and predictability because it's the same regime. We still don't know who's going to be the chief minister, and there's a bit of a niggle there. But the hope is that all of this 6-7 months of uncertainty and volatile campaigning will be put behind, and Maharashtra will try and pick up some of the ground that it has lost in investments. In terms of, a lot of the investments have gone to Tamil Nadu and other places. Maharashtra has not kind of done as well as it could have. While it still is number one, and those are the claims, but clearly it has some ground to cover. So that's the first thing, that there will be predictability. The second aspect, of course, is that it settles several political questions as to which are the formations. So between the two Shiv Senas, we know which Sena has done well. Between the two NCPs, we know which NCP has done well. And the Congress, as usual, is busy writing its own epitaph or obit, as you would want to say it. At the central level, this sort of will change sentiments for the union government.
Right. So if I were to look at, let's say, from a continuity point of view, even if, let's say, there's a change in the chief minister's position, as in the person who will take that role, there is no real change in the government itself. And what could it have been that stopped them from doing something which will maybe allow them to do it now, or vice versa?
Well, theoretically, it is a BJP-led alliance, so the policy remains the same. They focus on infrastructure and stuff like that. But governments are also about personalities. So Eknath Shinde brought to the fore a kind of personality which was a go-getter, common man, touch to the governance and all that. Now, the budget and the financials, they are in quite a bit of a mess now because of all the promises that have been made. There is an estimate that in the current run to the election, promises worth over 65 to 70,000 crores have been made. Now, Maharashtra is a state which is among the highest in outstanding liabilities, something to the tune of 7.12 lakh crores. While its state GDP is large and, it can probably fund some of it, this is not a good situation because clearly this will have long-term implications. So whoever takes up the finance department will have to figure out how to bring down this. So because all of the electoral sops that have been offered, I mean, free electricity, or what the BJP likes to call zero bill electricity, the increased salaries for the madrasa teachers, the new fund for rearing desi cows, the 46,000 crore plus what would be spent on the Ladki Bahin, and the increased outgo on the PM Kisan. All of this has implications for the state's borrowing program, its deficit, its debt.
And you've sort of answered my question before I came to it. But if I were to though look ahead, this clearly would have been a problem. Any government that came into power with so many promises would, let's say, have to tackle. Now, if you were to contrast these promises or place these promises in the context of where the economy is going, how would you then look at the prospects of the ability of a new government to actually deliver on them?
Well, here's how you could frame this. The SOPs are needed because there is acute distress in the agriculture sector, there is youth unemployment, and rising cost of living. For all that the RBI has done for over 24 months, food price inflation has been above 7%. This has implications for consumption, this has implications for investment, it has implications for incomes and employment. So clearly, there is a political need to have these SOPs or these income supports. Now, the danger here is, Govind, that once political parties figure out that they can win election with SOPs, what is the incentive for them to fix the issues of unemployment or agri distress? That's the moral hazard that India is playing up with. And it's not just Maharashtra. There are about a dozen states which have this cash benefit transfer for women. And apparently, one estimate says that states in India are spending roughly 2 lakh crores on these cash transfers.
All the states, or
These 8 or 10 states or 12 states which have these schemes are spending something to the tune of 2 lakh crores. I think this is one of the analysts in State Bank or someone has put together this estimate. My own back of the envelope calculation brought it to about 1.4 to 1.5 lakh, but I may have missed some states.
now, if you were to look at all these SOPs, and we're calling them SOPs or let's say benefits because they're transfer of benefits. Now, could there be genuine economic benefit from, let's say, empowering women? And that, to me, at least theoretically, could be an objective and an outcome, or some of the other moves as well.
Well, absolutely. Money in the hands of the private individual is spent better and more efficiently than money in the hands of the government. That's the thesis, the Friedman thinking. The concern is that all of that spending is sustainable if the government is able to push investments, push employment, and then consumption. If you have money and you see you're not going to get a job, or if you have money which is sort of owed to some, private lender in agriculture, that money, does it come to consumption? I'm not so sure. So the theory is that money given to people will trickle down into the consumption story. In theory, that works, but I mean, it's not like a great sum. I mean, people are not going out and buying the 9 crore Maybach, are they? So this is the money that is sustenance money. Yes, it will sort of calm down some of the social unrest. Whether it props up the economy is an entirely another story.
Shankkar, thank you so much for joining me.
You're welcome, sir.
Where could gold prices go? Gold prices have shot up once again after wilting for a few days against a strong dollar, as it has or is seen as a hedge against America's imminent protectionist stance. Gold headed for its biggest weekly gain since March last year, rising by as much as 1.5% to $2,710 an ounce after Ukraine said Russia launched a new kind of ballistic missile at the city of Dnipro in an alarming signal to Kyiv's Western backers, according to Bloomberg. Now, gold is up more than 30% so far this year, thanks to central bank buying, including by countries like India. That's not the only reason, but an important one. Bloomberg reports that there are widespread expectations for fresh records of gold prices in 2025, with Goldman Sachs, and we'll come to that in a moment, and UBS both issuing bullish outlooks for gold in recent days. Back home, gold prices were up in their best weekly performance since March 2024, up around 5%. Higher at 77,685 per 10 grams on Friday. Now that's about 1,850 away from the record high of 79,000 rupees 535. Remember that import duties have changed and rather dropped quite a bit since the budget in June, thereby reducing the cost of gold. According to commodity market experts, gold prices are rising for three reasons broadly: the Russia-Ukraine war, which we've been talking about, volatile stock market, and uncertainty around the US economy after Donald Trump's victory in the US presidential elections. To get a sense on where gold prices were headed and what the outlook was in coming months, I reached out to commodities analyst Sugandha Sachdeva, founder of SS Wealthstreet, and I began by asking her what she was seeing in gold price trends right now.
So, snapping a 3-week decline, gold prices have shown a strong weekly performance, surging by close to 5%. So, it was one of the best weekly performance since March 2023. So, the reason why we have seen such a huge surge in prices after the 3-week decline, the basic reason has been the escalating geopolitical tensions between Russia and Ukraine, where they both have kind of intensified missile attacks and which has kind of driven safe haven flows into gold. So this conflict is adding a layer of risk to global markets, and it is actually prompting investors to seek refuge in gold. And that is the reason precisely we have seen a lot of bargain buying and bottom fishing opportunities that have come in prices after a 3-week decline. So prices have also found a very strong floor at levels of around 73,500 mark in the domestic markets. And looking at the international market, 2540 per ounce mark has acted as a very strong support area, from where we have seen a strong rebound in pricing. So these weekly gains have kind of reinforced gold's role as a preferred hedge against geopolitical tensions. However, on the other side, if you see, US is in talks for a ceasefire in Israel and Hamas conflict. So that is also another layer which is kind of acting as a headwind for gold prices.
So, one of the factors that has driven prices down has obviously been the strong dollar, which continues to be strong. So, as you look ahead, what are the various forces that are at play, both pushing it down and others pushing it up?
If you look at the overall macroeconomic backdrop for gold, it remains quite mixed. On one hand, we have a stronger dollar, which was just few weeks back trading at 100 mark. We have seen it testing a new 2-year high at 108 odd levels, which is acting as a big headwind for gold prices. Besides this, Fed has also indicated that they are in no hurry to cut rates. So we are not going to expect aggressive rate cuts by the Fed next year because we have a lot of uncertainty after the Trump's victory in the US presidential elections. And he's likely to enact expansionary policies because of which it could reignite inflation in the US economy, and Fed is likely to be very cautious in terms of cutting rates. So this has kind of clouded the outlook for monetary easing path for 2025. So we are likely to see higher for longer interest rates. So that is also likely to act as a dampener for gold prices. Besides this, we have also seen funds flowing towards Bitcoin. We have seen a phenomenal rally in Bitcoin. The US yields have also been rising and they are at their 6-month highs. So all of these factors are acting as headwind. Besides this, I've also spoken about the fact that there could be a ceasefire in the Middle East region. So that could also erode much of the geopolitical risk premium in gold prices. So in terms of the tailwinds, we have seen strong inflows into gold ETFs. After 3 consecutive years of outflows, last 6 months, we have seen strong inflows into gold ETFs. Central banks have been buying and geopolitical risks are rising. So all of these factors are acting as a strong tailwind for gold.
Right. And how are you seeing the domestic market, Sugandha? We've sort of passed the festival season, but there's wedding season, which of course comes every year. But are you seeing any domestic trends apart from the global ones which you've been talking about so far?
Apart from the global gold ETFs, we have seen strong inflows into domestic ETFs as well. Besides this, there is going to be strong demand because we have a lot of weddings lined up this year. So that is also likely to reignite gold buying. And we have seen some correction also from the record highs. Prices did correct towards 73,300 odd levels. So that has led to a lot of demand coming back in the market because a lot of investors or somebody who wanted to buy for their weddings, they were waiting on the sidelines. And they have come back to buy gold for consumption purposes also. So that is also providing a lot of flow to prices. So a mixed bag of factors. I think in terms of the price outlook, what I feel is that 78,800 mark is likely to act as a very stiff hurdle on the higher side. And after a huge surge that we have seen in gold prices for the last 4 quarters, I think this quarter we are going to see some more consolidation and some correction as well. But yes, we should be ready for a lot of volatility ahead for 2025 because after Trump assumes office in January, I think there is going to be a lot of volatility in gold prices after that.
What is the outlook looking like, Sugandha, beyond December and the next quarter or so?
So, with gold prices have been in a persistent uptrend. Since 2016 onwards, we have seen a strong rally in gold prices, barring 2021, wherein we saw some correction in prices. I think this trend is likely to continue at least for the first half of next year. there's a lot of factors which are going to drive gold prices. There might be some brief corrective phase that we may see in December, but then from lower levels, we are again likely to see a lot of buying interest. I think these rising geopolitical risks, the shift in US policy post-elections, and strong central bank buying, as well as significant ETF inflows and the rising US debt levels, all of these factors are likely to act as a catalyst that could drive prices to new record highs in 2025. So we believe that investors can add gold on small dips around 72,000 to 73,000 odd levels in a staggered manner. And for next year, we are expecting levels of close to $3,000 per ounce. And in the domestic markets, we could see levels of around 84,000. So I think gold should form a part of every portfolio. And it is, I think, adding gold to your portfolio leads to a lot of capital protection also, as we are seeing a lot of rising geopolitical risk currently. And there's going to be an atmosphere of de-dollarization as well, because Trump is likely to follow America First policy. So that could lead to decoupling of the US economy from the global economy. So that is also likely to lead to a lot of pressure on dollar and could likely benefit gold prices in 2025.
Right. Yeah, that's interesting because even Goldman Sachs, for example, has been talking about $3,000 an ounce. So are you saying that $3,000 an ounce roughly equals about 84,000 rupees at current conversion rates?
Kind of. But yes, if we are likely to see further depreciation in the Indian rupee, wherein it has already hit a record low of around 84.45, the equation could slightly change and there could be some divergence. But then largely, these are the levels which correspond to each other. I think it's going to be an interesting mix of economic, geopolitical and monetary dynamics that are likely to influence investor behavior and the trends for gold next year. But then for first half of next year, we are pretty positive on gold prices. After that, we might see some consolidation, but then this trend is likely to persist in 2025 first half.
Sugandha, thank you so much for joining me.
Thank you for having me.
Musk's China bets. And before we go, there is that big conundrum. How does Tesla's investments in China, or how do Tesla's investments in China square off with its CEO Elon Musk's bonhomie with Donald Trump, the incoming president, who wants to impose more than 60% plus of tariffs on China? So the precise answer, I'm quite sure, will emerge soon. But meanwhile, a Wall Street Journal report over the weekend points out that for Tesla, China is crucial. Of course, we know that. But Tesla's Shanghai factory, just to remind you, is the company's biggest car factory, and half its cars globally were made there in the past 4 quarters or the last year. So let me repeat that. Tesla's Shanghai plant is the company's biggest car factory, and half its cars globally were made there in the last year. During that period, Tesla sold more than 900,000 China-made vehicles, nearly 1/3 of which were shipped to Europe and other overseas markets. So we mentioned in the core report that China was Tesla's biggest factory, but like I said, we did not quite realize that half the production comes from there. Tesla is meanwhile awaiting Beijing's final approval for its latest driver assistance technology, which Tesla calls full self-driving. Musk says the value of Tesla, according to Wall Street Journal, lies primarily in its plans for autonomous driving, and the company has said it expects approval in the first quarter of next year. Autonomous driving, of course, is something many investors feel is a tactic to keep the stock price bloated with futuristic visions and promises rather than on-ground sales, so that's a different story for now. The Wall Street Journal also says that in 2018, Elon Musk visited Shanghai, where Li Qiang then served as the Communist Party secretary to sign a deal for Tesla to build a $7 billion plant in that city. And at that time, that was the first overseas plant. Tesla was also allowed to assume sole ownership of the factory, and this was the first such case after decades in which China generally requires foreign automakers to form joint ventures with local companies. The interesting thing is that once Tesla came into China, that also sparked either simultaneously or coincidentally China's EV market growth, which took off in 2020, and Tesla's relatively or rather moderately priced car, which was made in China and kicked off a demand for electric cars, says the Wall Street Journal. And this also led to the overall EV supply chain developing quickly and contribute to the rise of domestic EV makers, who are, of course, now through companies like BYD, threatening Tesla itself. That was the core report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in, and thank you once again for listening.